Hey everyone, I'm Lynn. Big news just shook Wall Street. Chamath Palihapitiya, the man once dubbed the SPAC king and a central figure in the SPAC boom, dropped a prediction so wild it made investors' jaws hit the floor. On a recent podcast, Chamath argued something that goes completely against conventional logic. He believes SpaceX will never go public in the usual way. No traditional IPO, no Starlink spinoff. Instead, he says Elon Musk will engineer a reverse merger, folding SpaceX into Tesla itself. This wasn't met with mild surprise, it caused a literal uproar. To many investors, the expectation has always been that SpaceX or its satellite arm Starlink would eventually list on an exchange, letting the public finally buy in. But Chamath said, "No, you're looking at it all wrong." According to him, Musk is crafting one of the boldest capital moves in modern history, fusing two world-defining assets into one financial fortress. This isn't about simple stock mechanics. This is a battle for power, for control, and for strategic dominance over regulators, Wall Street's quarterly obsession, and even established global economic structures. Today, we're going behind the capital markets smokescreen to unpack Chamath's contrarian prediction. We'll break it down through four lenses: capital pathways, power dynamics, strategic synergy, and market impact. Let's start with the basics. What exactly is a reverse merger? Reverse merger versus IPO. Typically, for a unicorn like SpaceX, valued at well over $200 billion, the path to going public is familiar. File registration documents, enter the IPO queue, go on a roadshow, price the shares, ring the bell. But Chamath says Musk won't do that. And instead, SpaceX would assimilate into Tesla, a company that's already public. This isn't just a shortcut, it's a way for SpaceX to become a traded entity without enduring the lengthy scrutiny of a public listing. Why Musk shuns IPOs? To understand this, you need to understand Musk's worldview. Elon has openly voiced his frustration with quarterly reporting cycles and regulatory oversight. For him, every earnings release isn't just a number, it's a shackle. Wall Street analysts gossip about margins and deliveries. Meanwhile, Musk's ambitions reach far beyond next quarter. Colonizing Mars, building interplanetary infrastructure, creating systems that don't just make cars but redefine human civilization. Those goals require steady, multi-decade investment, billions sunk into research with no guarantee of profit for years. Can you imagine pitching Mars-scale capital deployment to a room of quarterly focused shareholders? The answer is obvious. You would hear more objections than applause. Control, not capital. Chamath hit the nail on the head. This move isn't primarily about raising money. SpaceX doesn't need a fundraising IPO. Between rocket contracts and booming Starlink subscription revenue, it is already wildly self-sustaining. No, what Musk wants is control. If SpaceX and Tesla share the same shareholder base, then the most loyal, long-term Tesla holders automatically become owners of SpaceX too. This allows Musk to push aside short-term speculators and keep the ecosystem focused on long-term vision. Let's call this what it really is: centralization of power. That's the beating heart of Chamath's thesis, the governance wake-up call. Now, some of you may be thinking, Musk is already the richest guy around. Why does he need more control? To answer that, we only need to look back at Tesla's $56 billion compensation battle in 2024. The Delaware court struck down Musk's pay package, saying the board wasn't independent enough. That decision was a watershed moment. Even someone worshipped by shareholders isn't immune to legal and governance limits. Tesla ended up moving its incorporation to Texas, and shareholders later reapproved a compensation plan. But the message was loud and clear. You can be visionary, but legal structures still bind you. Right now, Musk's stake in Tesla floats somewhere between 13% and 20%. For most people, that sounds astronomical. But for someone trying to shepherd artificial intelligence, autonomous systems, robotics, and even interplanetary expansion, it's not nearly enough. Musk has said even 25% voting control is the minimum he'd like to feel comfortable pushing the most cutting-edge, long-term tech without shareholders pulling him back. Why a reverse merger matters? Chamath sees the logic clearly. If SpaceX merges into Tesla, SpaceX's high ownership stakes become convertible into Tesla equity. Musk's overall voting power climbs. Control consolidates without appearing overtly hostile. This isn't mathematics, this is governance engineering. The benefits are twofold. First, you eliminate divided leadership. No more managing two boards, two agendas, and potential conflicts. Right now, if Tesla's autonomous driving wants to use Starlink's infrastructure, they are separate entities. That means contracts, compliance, regulation. Every move invites legal scrutiny. Merge them? Boom. Internal division becomes internal collaboration at lightning speed. Efficiency rockets higher. Fortress architecture. Under this unified governance structure, Musk becomes the undisputed commander. Not just CEO, not just founder, the supreme architect of an empire. This is the part that shocks most people. Most investors assume a company grows, then splits into parts, and that's logical. You unlock value through divestitures. But not Musk. For him, the last thing you do at a crucial inflection point is scatter power. Instead, you bring it all together, the everything company vision. On the same podcast, host Jason Calacanis dropped a revealing remark. Musk has entertained the idea of building a mega holding company for years. This isn't some fantasy about a universal app called X. It's about a platform that combines Tesla, SpaceX, Neuralink, the Boring Company, XAI. Imagine a structure that merges transportation, space, energy, AI, and human-machine interface. Chamath compares it to a blend of Berkshire Hathaway's structural resilience and Alphabet's technological breadth. It's a terrifyingly powerful hybrid. Once SpaceX and Tesla merge under one hood, the next moves might look like this. Neuralink becomes the interface between humans and AI. Boring Company builds subterranean infrastructure for Tesla. XAI becomes the in-house intelligence layer for every connected system. This isn't a business, it's a technological civilization in formation. Why skeptics miss the point? Wall Street analysts immediately push back. Cars and rockets? Great story, but lots of noise, little logic. But Chamath sees something deeper. He observes fundamental technological resonance between the companies. Tesla dominates battery tech. SpaceX demands extreme energy density and robustness. Tesla's gigacasting and automation expertise could benefit SpaceX manufacturing. Starlink's global broadband becomes a backbone data layer for Tesla vehicles. This isn't coincidence. It's architectural overlap. FSD plus Starlink equals unmatched AI advantage. Tesla's FSD suite trains on massive real-world data. SpaceX's Starlink spreads data everywhere. Combine them. Every Tesla on the road could tap into persistent, low-latency global connectivity. No blind spots, no signal deserts. This synergy alone gives Tesla a data advantage competitors struggle to match. Optimus robots, from factory floor to Mars, now imagine Tesla's humanoid robot Optimus. Enhanced with SpaceX's advanced radiation-resistant aerospace materials, these robots no longer belong solely in factories. Some could be the first settlers on Mars. Chamath hints at this profound cross-domain integration. Every dollar invested in one area accelerates progress in another. What this means for investors. If this merger ever happens, Chamath believes it will trigger a true valuation paradigm shift. Right now, Tesla's valuation is tied to car deliveries and EV penetration. But merge with SpaceX? Then your shares represent a stake in satellite networks, orbital launch monopoly, interplanetary logistics, autonomous ecosystems, AI platforms, robotics futures. This turns your Tesla stock into something closer to a super option on human progress. For retail investors, that's a level of scarcity that could drive valuation beyond simple multiples. The elephant in the room, the risks. Chamath is well aware of how contrarian this idea sounds. To pull this off, Musk would need to navigate three massive hurdles. Permet's regulatory scrutiny. A combined entity controlling rockets, satellites, AI-powered transportation, and global connectivity is bound to trigger antitrust review. 2. Valuation complexity. SpaceX's private financials plus Tesla's public valuation equals pricing negotiations from hell. Early SpaceX backers and Tesla shareholders would have to agree on a fair exchange ratio. 3. Culture and integration. Two massive organizations with different internal cultures, force-fitting them together could cause talent turnover and friction. Chamath knows all this, but for him, Musk lives by a higher design principle. In Elon's playbook, physical laws come first, business rules second. If merging accelerates humanity's journey to Mars and beyond, Musk will throw conventional business logic out the window. If you like this video, don't forget to subscribe. I'm Lynn. See you next time.